Hello, welcome to the weekly technical analysis review here at XM.com. I'm Rafi Barajan, currency analyst, and today is Monday, February 12th, 2018. Our pairs for this week are dollar yen, the euro dollar, the pound dollar, and WTI oil futures. So let's start first with dollar yen. The pair hit 5-month low of 108.04 on Friday. We can see though that the near-term bias is rather neutral at the moment. RSI has flattened, though it is still below the 50 neutral area, suggesting that the risk is to the downside. If we move on to the 4-hour chart, we can see that prices are meeting resistance at the 78.6% Fibonacci retracement of the up leg from 108.87 to 109.78. If the pair sees further the upside momentum gathering further strength in the coming days, the next resistance could come from the 61.8% Fibonacci retracement at 108.95, and then above that we have the 50% Fibonacci retracement at 109.11. To the downside though, we can see the next target is likely to be the 161.8% Fibonacci at 107.62. That's assuming, of course, that the current support level of 108.04 doesn't hold. In the medium term, the outlook is looking rather bearish at the moment. We did see a bearish crossover of the 50-day moving average with the 200-day moving average, and we can see the MACD remains firmly in bearish territory, although we are now seeing the red signal line of the MACD now moving slightly outwards, so perhaps it could soon be moving back towards a more neutral phase in the medium term. Let's move on to euro dollar now. We can see the euro dollar is also fairly neutral at the moment. RSI is flat at the 50 level. There is immediate resistance coming from just below the 1.23 handle at around 1.2290. That was also a previous resistance area as well. If we move on to the 4-hour chart, we can see the next resistance will likely come from the 1.2365 level. That's also where the 50-period moving average is currently at in the 4-hour chart. Above that we have a series of other key resistance levels based on that congestion area we saw back in January. We've got the 1.24 handle and then the 1.2445 level before hitting the 1.25 level. To the downside, the key support to watch for is the 1.2165 level, and then below that we have the 50-day moving average at around 1.2075. In the medium term, euro dollar is still very much bullish, though we can see from the MACD there's been a loss of momentum in recent weeks, but we can see it's still comfortably above the 50-day moving average. Now let's look at pound dollar. Pound dollar, another pair that's fairly neutral in the short term, although if you look at the stochastics, it is in oversold territory and now appears to be trying to move up again. We do have some upside momentum today. On Friday we saw the pair hitting a fresh low of 1.38 1.3764. That was below the 50% Fibonacci retracement, but we did see prices quickly recovering back about 50% retracement of the up leg from 1.3302 to 1.4344. So that area around the 50% Fibonacci retracement at 1.3820 or perhaps closer to the 1.38 handle is now acting as a major support area. Prices at the moment are being capped by the Tenkan Sen line of the Ichimoku cloud in the 4-hour chart. A break above that level around 1.3875 should clear the way towards the 38.2% Fibonacci retracement at 1.3945, and then a break above that would open the way towards the 1.41 handle. But to the downside, we do have major support at the 1.37 handle. That's also the 61.8% Fibonacci retracement, and also it's just above the 50-day moving average. So clearly, a major support area around the 1.37 level. In the medium term, we can see we still have a upward sloping 50-day moving average, though the gap between price action and the moving average has clearly been narrowing in recent days. So that's pointing to a weakening of the bullish bias, bullish outlook in the medium term, and if prices continue to trend downwards, we could soon see that that bearish, the bullish outlook turning to a neutral one. And finally, let's have a look at WTI oil futures, because prices did slip to 7-week low 58.04 on Friday. That was just below the 78.6% Fibonacci retracement of the up leg from 55.79 to 66.63 at around 58.10. So that area is still the major support level to watch for. The short-term bias is bearish, though we are seeing some upside momentum at the moment. RSI is pointing upwards today, though it hasn't quite reached the 50 neutral level. The immediate resistance to watch out for is the 50% Fibonacci retracement at 61.20. A break above 61.20 would then clear the way towards 62.50 and the 64 handle. Those are the 38.2 and the 23.6% Fibonacci retracement levels respectively. But if the 58.10 resistance support level doesn't hold, we could then see prices moving towards that low from back in December of 55.79, and below that we have the 200-day moving average at around 52.60, and 52.60 has also been a major resistance area in the past as well, so that's an important potentially future support level for oil futures. In the medium term, we can see the MACD has dipped slightly into negative territory, and prices have dipped below the 50-day moving average. So clearly that bullish outlook is now close to turning neutral, if not already having turned neutral. If the downslide continues, we could then see the oil futures moving into a bearish phase. That's it from me. Thank you very much for watching, and have a great day.